Good morning, everybody. Welcome to Tuesday. A bit of a slow one going on. A bit of a slow one going on this morning. Morning, Kay.
Good morning, Ryan. Good morning, everybody.
Hope you're all doing well. Yeah, it might be a bit of a quick show today. As you can see on the screen there, just looking at the vols, the volatility levels going on. I tend to look at these 1 month. They're called 1 month at the money options volatility pricing percentages there, and they're still pretty elevated. I should say that around about 10%. Usually, if we're really quiet, vols sort of sub 6%, 7%. That tends to mean things are pretty calm. Not a lot going on, not too much volatility in the market. We have seen things like dollar yen and the euro, particularly before the pandemic, down in the 4% mark. Now these have been high as sort of 13, 14% of late with everything going on. They're still running pretty hot at sort of 10, 11%, but that's still way off the 12s, 13s, 14s we have been seeing. And hence why we're seeing things a little bit calmer in the markets at the moment. Call it summer trading, call it wait and see before the Fed. But you can see this chart here on a site called Century Derivatives. They are a broker. I don't endorse them or anything like that. I just use it for this widget. If you come to that and tick on there's a vol button that you'll see down there, you'll get these vols. It just gives you an indication, particularly for the majors. Things like Aussie dollar, Kiwi, and other sort of less traded pairs often have higher volatility. But just to get an indication of the majors, I usually just look at euro dollar cable and dollar yen, and just gives you an idea of how volatile things are. And I use this as an indicator, how a price might move on anything, headlines, data, things like that. Just let you know that, if vols are sort of 6%, 7%, you might get 5, 10 pip movements on anything like headlines. But as that vol increases, such can increase the movement in prices. So anyway, just something to keep an eye on there if you are interested in that sort of thing.
Yeah, it's
nice looking at the news, very quiet as far as I can see. Sorry, Kay.
Yeah, it's a nice tool as well, because we can just to add a little bit to that, you can see also the evolution of the vols. When you click, for instance, on the euro dollar 1 month, there you have it in the bottom of the screen. You see where the current is versus a week ago versus a month ago. It's all very interesting. There's a lot of interesting stuff on that on that page, because you also see, when you go back on the vols, you can see the realized, what it is, where the vols are compared to what the actual market moves are, and it's a very interesting tool to keep an eye on what the expectations are of the FX options market, because the FX options market is deep compared to. I'm not saying it has as much volume, but there's a lot of option playing going on by big players. And you can see then what the realized volatility is compared to what the expectations are, where the vols are right now. It's a really nice page, nice tool, I must say.
Yeah, and options are a big feature of the FX market, because if traders are trading volatility and things like that, then obviously they're going to be hedging their options in the spot market. So it can impact. Particularly if we get to quiet periods, we can see a lot more hedging activity moving the price, especially around expiries. We had that fairly decent expiry yesterday in euro dollar 102.40.50, and the price, pretty much stayed glued to it around expiry, and other pairs were moving, not a lot, but they were going up, going down. But just for that period, euro dollar didn't really move until after the expiry. After we passed through that. So it's one of those things that these different things come into the market at different times, and when things get quieter, we can see more options influence in the market. And just to have a look at that, we haven't got a lot on the options today. probably the biggest is this one in the Loonie 129.0020, 1.18 billion. You know, it's decent. It's not overly huge. It's spread across 20 pips worth of strikes. But obviously we're a bit far away from that at the moment. Well, edging closer at 128.67 at the moment. So just keep an eye on things like that, because it can put a kilter in the market, if you like. So as I was talking about yesterday with the 2 yards going off at 102.40.50 in euro dollar. If I see other dollar pairs moving significantly, either way, but I see euro dollar not doing anything because it's looking like the expiry is keeping it glued to that price, then that potentially presents a possible fade trade where euro dollar may catch up to the other dollar pairs once the expiry is passed. It's not 100% correlation. You wouldn't bet the farm on it, but I just look for those little moments where perhaps a price in one pair is out of sync with what's going on in the wider market, and then I look at potential opportunities there. Anyway, let's knock off a couple of the headlines. Not that there's a lot. Japan upgraded its economic assessment marginally. Now, the Japanese government, they bring out this economic assessment. You can see it on the screen now, and it's pretty mechanical. What they do is, it's not like an ECB statement or a Fed statement where they make big wholesale changes to language and surprise things. They all follow a particular path. So I did a text comparison this morning. You can see this one on the left is the June, and this one is July's. So you can see they make minute changes. The top line, the Japanese economy shows movements of picking up. July is the Japanese economy is picking up moderately. It's subtle language changes, but it can give you an insight into the thinking of the Japanese government. This sort of thing can then guide, fiscal policy. It also has a bit of an influence in terms of the Bank of Japan, because obviously the Bank of Japan, they're setting policy based on the fundamentals. Again, it's not a big thing to bet the farm on or even trade unless it starts getting really bullish, particularly on things like employment, wages, and that sort of thing. But they tend to make really minute changes. It really is like one-word changes here. Kay, do you ever follow this one back in the day, or still for
yeah, looking at it, but unless there's some really decent changes there, it's like a good read when the markets are quiet, and then moving on, to be fair. Yeah. Unless they make big changes, right?
Yeah, so really it really needs some big changes. If we started seeing things, comments about wages really increasing, really moving higher, and CPI moving higher, but not based on, rising raw material prices and supply side constraints, as they highlight there. If they start really getting strong on that rhetoric, then you can start to maybe think that the Bank of Japan are going to start looking into that as well, and potentially then lead into changes in language or policy there. So yeah, one of these things that comes out every month, and you just gloss over it and see if there's been any big material changes. As I say, you can get that from the Japanese government fairly easily when it comes out. We also got the Bank of Japan minutes out overnight. Nothing really shocking or anything we didn't know in there. So that water passed under the bridge. Biden, however you want to call it, Biddy, as we like to call him, was out saying he doesn't think the US is going into recession. So we can probably count that as the US is going to be in recession on Thursday. We've also got these Nord Stream gas stuff rolling on. And it's one of these things that it's picking up in the market. It seems that Europe and European countries are running around with their pants on fire because they want to propose gas cuts, and then some countries don't want gas cuts. We've just had Greece coming out saying that maybe the European Commission or European Union should offer financial incentives for cutting gas. There's always a pound note behind it. And as I say, some countries don't want to cut or this and that. And it's really making a bit of a mess of it all from the European side. Putin's probably sitting back in his office watching all these Reuters headlines or Bloomberg headlines popping up on his screen and just sitting there laughing. That while Europe has been saying it's not going to be impactful and they're going to move away, when it comes to the crunch, they're all getting worried about filling up for winter. This is something that we've said before. It's okay during the summer and everyone's like, yep, it's nice and hot, but we need to look ahead at what happens in winter. When it does turn cold, if there is a cold winter in Europe, how are they going to cope with gas supplies? They're all behind the curve on it, and there's no real consensus amongst European countries and the EU and Eurozone as to what they do. So this is potentially a situation that's going to grow further, and it could put some pressure on the euro in terms of the fundamental outlook. Going to hit German industry. It's going to hit industry across Europe. If factories have to close because they need to preserve gas supplies, that's going to impact activity. So it's all looking a bit of a sour situation. As far as this latest news on this blooming turbine business, Siemens have got, the latest story was that all the paperwork was done, but Gazprom was saying that some paperwork was missing. We've heard today from Siemens that there was some customs documentation that needed to be provided by Siemens, that they needed some form they needed to fill out and present to Gazprom. So that's in the process of being done. This turbine part, which was not actually for this maintenance period, if I recall correctly, was for one further down the line. That's all ready to be shipped. As far as Siemens and everyone else is concerned, all the paperwork's done. The part's going to be shipped, and then we'll take it from there. Kay, I know you've been following this gas stuff as well.
Yeah.
Is it more Russia playing games still, or are they just playing the we've got to dot all the I's and cross all the T's?
I think there is this aspect of playing and knowing that they can squeeze on Europe, right? There's been a bit of a bad will going on, as we've seen with all this paperwork and things. It's twofold. I think Europe, they want to force Europe to stick with them, I think, and then Europe is making a bad work of it to either cut it all, but they can't because they don't have enough to replace it, in my opinion, yet.
Yeah.
And then not knowing what to do with it, and if they put pressure on the European countries to cut gas production, as you're saying, like that's all a nice plan in summer, but what when winter comes? We're already hearing from several countries that it's going to be impossible to align with that 15% consumption cut. So yeah, for the time being, it's from both ends, but Russia knows that they can squeeze Europe on that, so they are using it to the fullest. And in the meantime, they are upping their gas and oil exports to China and some other countries. So yeah, it's a lot of brinkmanship, but I think it's a risky event for Europe. Yeah, I mean, Russia is probably saying, okay, if you're going to lose that site, so be it. It depends how much how much promise to exports they have from the rest more eastern side. But it can't be good for Europe, at least for as long as nothing is resolved. If they really put their threat to reality and to cut it down to 20% for a prolonged period, I don't know how Germany, Austria, Italy, and you name it are going to replenish the reserves. I don't know how they're going to do it.
Yeah, exactly. And then you get people like Turkey's Erdogan coming out last night saying he's going to boost oil and gas purchases from Iran. So, they're all skating around the back doors. Russia's selling to Iran, China, India. They're still making record profits, so they're not losing out as much as Europe would hope they were going to lose out. So it's all brinkmanship. I'm not suggesting everyone rushes out and buys gas bottles for the winter, but I'm going camping next week, so I might buy some extra stocks just in case. So it'll make me a cup of tea in the morning if they do cut the gas off. But we shall see. It's an ongoing issue that we need to keep an eye on. That's it from the news and stuff as far as I can see. Kay, you got anything you've picked up this morning?
News? No, it's just that there's this little, it's not a fight, but opposite opinions are starting to diverging up what the Fed might do further down the line are starting to pop up now, and the major US banks are getting more and more divergent. Some saying that they are going to continue as is, others saying that we are really close to the end. It's getting interesting, and it's not like your small banks coming up with it. It's really the JP Morgan, Morgan Stanley, Goldman. They are starting to really diverge opinions, and that may keep the market on their toes. I know the strategists are not, or the economists are not really the brightest guys in the past or girls in the past 2-3 years in the pandemic and all, but still they have a whole host and a whole suite of followers. So and people making actually trading decisions on the back of what they are saying. So just something that I found was a bit of a highlight of the past 24 hours.
Yeah, definitely. And that's what we're going to have to deal with, as we get into and over the Fed, just these changing expectations. As I said and repeated, it's not necessarily the announcement of what they hike by, the expected 75 pips. It's what the Fed see the path is going forward. We are looking at a terminal rate up at 3.5-4%. We are looking at a neutral rate 2 to 2.5%. And it's all about how quickly they may get to that terminal rate, 4%, let's say, whether they get there at all, and then how quickly they may come back from that 4% or terminal rate down to the neutral rate. And that's what we're going to be trading really after the announcement or through the announcement, whatever Powell says. And this is what the banks are going on about. Are we going to be getting cuts next year? Is it 2024? Are they going to get as high in their rate path? So it's all about trading those expectations at the moment, rather than the actual rate announcement we get. And that's good for us because that gives us the volatility to trade. If prices push themselves way out of sync of what the news is, then that's what we look to trade. You have to excuse me again. I'm keeping an eye on dollar CAD because I'm doing a little bit of sniping now. So I pinched a small long 43s yesterday. I'm just trading this support zone here that I've been highlighting round about from the 50s down to the 20s, let's call it. So I took a little long yesterday, or I had a long on Friday as well. Got out of some, got stopped on the trailer on the way back at 80, I can't remember what it was, 75.80. Again yesterday at 43, added a bit at 20 this morning. The 43 ad I got out of some at 71 on this move here, so I got in down here. Took some profit out at 71 up here. Left a couple of orders in at 20 and 05 overnight. Got filled on the 20s this morning. I've knocked a bit out already this morning. I'm just potentially looking to knock a bit out again in the 70s if we get up there. So I am keeping one eye on my trading screen to do that again. And as I say, just trying to play this range that we're sitting in at the moment. I'm not going anything big. Just trading the levels, just scalping them and seeing what happens. No real bias in direction for now. Just keeping it calm and sweet ahead of the Fed and see where we go from there. So let's have a little round robin. Euro dollar's looking a bit soft this morning, back under 102. Got this sort of bit of a pivot area around 101.70s. I'm not really interested in here at the moment. Maybe if we get a move down to this sort of area, this is sort of a first line in the sand before we have a look at parity. Might be a bit of a stretch to get down there. On the top side, we are finding a bit more resistance, looking a bit more solid, you know, from the 50s, 60s up to the 70s, and then up to this fib here. So that's given us at least the top side area to keep an eye on. It's looking a bit more clearer than the downside. You know, do we hold here? Do we hold there? Do we hold further down? You know, closer to 101. So a little bit messy on the downside for me at the moment, but the top side is looking a bit solid. Kay, you got anything on the euro? You're just
no, really, 101.20, 102, three quarters. The range was rather there. After ECB through the numbers, we can't break the range. Now we are waiting for FOMC. Well, I mean, people know I'm short euro crosses rather than versus dollar, because I don't exactly know what's going to happen on the FOMC right now, and I'm rather short euro through the crosses because I still don't have a lot of confidence in this euro after the ECB rather messy 50 bps hike, and then at the same time we're getting slower data, and then this gas pipe thing. I still can't really buy euros, but I don't really know about the dollar right here and now. I mean, FOMC may be the decider for the next couple of weeks, but yeah, it's and just right now, 20-30 minutes ago, the market started to buy dollars. I really think it's mostly due to having sold dollars likely on those weaker data that came out, and then now starting to hedge them into the FOMC as well. I really think like the dollar pairs may just range for a while, and then but my preference is and the way I'm positioned is still rather for a weakish euro. I was saying yesterday on the on Face, I say it could be that we might be in a period of both euro and the dollar being on the defensive. So you just trade euro dollar ranges or leave it alone, and then see what the rest of the dollar pairs are doing, and then see what the euro crosses are doing. So take each of them in their own right.
Yeah, I mean, you know, it's important to talk about this because, you know, obviously different traders trade different ways. You know, scalpers will be happy that volatility is lower and they can trade the shorter term ranges, you know, much better. But, you know, we've been repeating this for several days now, and probably will be repeating this up to the FOMC and then past it. You know, sometimes trading is just about patience and waiting for the levels that you have. You know, I know, you know, you can probably read a lot of analysts elsewhere, you know, and there's always a pressure to trade. You know, you're coming, you're spending your time, you're sitting in front of your screens, you want to do something. And there's a lot of analysts that will always pick levels here, pick levels there. Market's going to do this, market's going to do that, because they're under pressure to produce analysis, basically. But when you're trading, sometimes you just got to sit and wait. You know, if you're happy to trade, you know, dollar yen between 136.50 and 136.70, you know, go right ahead, fill your boots. But for some of us, me particularly, I know Kay's in the same boat. You know, when you're looking at something like euro dollar, you're just not interested around here. You're just really not interested around it. Maybe you get a little bit of interest up towards the highs, you know, but otherwise, as Kay said, and we've been saying, those 103, 40, 60 parity, those are the two main edges. And if we're not going to test those things, then I personally am happy to sit and just wait and have patience. But it's important to do that. You know, we may be repetitive and say we're not trading, and maybe some of you folks in the show will come and say, oh, well, I'm not going to listen to these guys anymore because they're not doing anything. Well, no, that's just the way we trade. And you shouldn't feel a pressure to trade if you're not trading your ideal levels or your ideal setups. Don't chase trades because you get into something, the market flatlines for 5-6 hours, or you go offside 10-20 pips and it does nothing, and then you're scratching your head thinking, well, why did I take that trade in the first place? So it's all about picking your strong levels. You can find as many levels on the chart as you like, depending on your time frame, but my advice would be plot your levels. Then once you've got your levels down, go through them and say, right, which ones would I really be interested in trading? Am I going to trade every single level, or that one looks stronger because maybe there's a confluence of a fib, a trend line, a moving average, something that makes that particular level more enticing to trade than others. I have loads of lines on my chart. Doesn't mean I trade every single one of them. Some of them are just to show me the price action, highlight the price action at any particular point. So if we do sound a bit repetitive and on the show here, it's not because we're just boring. It's just that's the way we trade, and we don't have to trade every single price move that we see on the screen. Well, let's have a look at some of the questions here, and then maybe Kay, if you want to do your little round robin. Mike, do you believe euro dollar can go back to 102 up to 102.50 after the Fed meeting? Yes, of course it can go up to 102.50 after the meeting. Will it? Well, that's the question. It can go to 99 over the Fed meeting. It can go to 105 over the Fed meeting. What things can do is a little bit of folly. It doesn't help your trading whatsoever. What you think, what I think, what Kay thinks, it doesn't help our trading whatsoever to a certain aspect. The price will do what the price will do. Whatever happens over the Fed, the market's going to move. How we trade it is by saying, right, do we believe that this particular move is justified versus the information we've been given? Does it change the bigger picture, or is this just a knee-jerk reaction? So we can only look to trade what happens after the event and what the price does. If it goes to 102.50, okay, why can't it go to 102.80? And that's where you pick your levels and you say, like 103.40. We did it over the ECB. If the ECB were going to be super hawkish, that's your line that it has to break, 103.40.60. If it can't break that, let's say the ECB hiked 75 pips and we couldn't break that level, there's your clue. So it doesn't matter what I think, doesn't matter what you think. The price action is king. That tells you what you need to do with the price. So can it go to 102.50? Of course it can. It can go to 99 just as easily. Arif, Biden has COVID. What if he does not recover? I think he's all good with that, with the COVID. As far as I know, he's doing well. He's on his whatever meds they've stuck him on. I haven't seen that there's any adverse reaction. So I think that's not something that is going to happen. But never say never. Harris could take over. I don't know what the market will do there. There may be a little bit of a wobble because obviously there's a bit of uncertainty coming in, and probably the market will take a very dim view of Harris taking over. So it is a risk as low as it is. So keep an eye on that. We are hearing talk as well about this potential meeting with Z, China Z, coming up maybe this week, phone call or whatever it is. That seems to be ongoing. So he seems well enough at the moment to do that. Sorry, Kay, did you want to add in something in there?
No, I saw some comments about Truss and Sunak, but I think it's a bit early to because they're now going like the vote is only on the 2nd of September and the result on the 5th of September. They had their powwow last night, but I don't think.
Sorry, mate. What was that? We just missed the big. I don't know if you're talking before you're fully muted. Unmuted.
Yeah, no, Do you hear me now?
Yeah.
There was a question or a comment on Truss and Sunak regarding to the sterling, but you've already said something about it, and also the vote is now only on the 2nd of September and the result on the 5th of September. They had their little powwow last night, but I don't think that anyone trashed the other one also. I haven't seen anything major coming out of that. So I think we move on from that right now. It did not really influence a lot on sterling either. So for us
No,
traders, I don't think it had a lot of importance, this one.
no, it had there was a little bit of I wouldn't say animosity, but a little bit of talking over each other, and you know, you wouldn't think on the outset that these two were in the same party.
Yeah,
They were almost like they were competing parties.
Yeah, and that's what I also read from some MPs who said like that didn't sound like two prime minister candidates from the same party. Yeah.
Exactly. So that may create an issue moving forward, because there might be, you know, what you would hope is that a new leader would unite the party and move forward, but there might still be some divisions within the party. But it all depends how it comes out. You know, if let's say, for example, Sunak wins it, and the first thing he does is turn around to Liz Truss and says, "I want you in my cabinet," and she says, "Yep, no problem." Then yeah, you know, there's going to be a bit more unity coming through. But what you don't want is a divisive party trying to lead the government, because that's just fodder for the opposition, and it doesn't look good in front of the voters.
Absolutely.
I'm sitting here now. I do think perhaps the Conservatives have got a problem at the next election, which is 2024. Although there is a chance that Sunak could call an earlier election if he needs to try and cement his leadership, or Truss, whoever gets in place, a bit like when Theresa May came in, and pretty soon afterwards she held a general election. But I think there is a bit of risk for the Conservative Party if they had another election, because the voters are seeing this divisiveness and the fallout from Boris Johnson and all that sort of thing. I still think the Conservatives would win, because personally I don't think Labour are offering any credible alternative, but it may be a similar situation to Theresa May, where they lose a good chunk of their majority on a gamble on an election, whereas Boris had a really strong majority, or the government continues to have a strong majority. So after this leadership stuff is done, look out for the possibility of an early election. Otherwise it's going to be 2024, and that's a long way away in political terms. Kay, do you want to take over the screen for a mo?
Sure, mate.
And do your stuff.
Yes. Right. Here we go. Okay, I'm just going to run through a couple of the traditional ones. We've seen this relief rally on gold from the test again. It was pretty strong. I think it's how shall I say, perhaps not yet decisive, but at least big enough to take this zone again into account. In gold, it really set in a $60 nearly bounce, which is quite decent in terms of percentage. Now we are turning again around this 1722. I'm not in it in anything right now, but I would like to see what happens if towards the end of the month, because we are also in the end of the month week again already this week. What's going to happen if we ever get a retest hold again? I might start to leg into some. Silver, a bit the same. I think silver is slightly under the push and has difficulties to really hold up and to keep up with gold on rebounds, because the economic data have de facto started to weaken a bit, and we saw that with the European and the US data at the end of last week. So an industrial metal as this one is could just lag on the rest. So I'm looking at this 1870, 75 for a starter, then back up into the 80s. But it has to break above 1920, in my opinion, to start to get going again. just going to run a little over what I have still running right now. It's not a huge deal, but last week I went short around this trend line again in the euro sterling. We went below, above, and then when it failed, I went short again. Been managing some of it around. I've got a core short still running. I do think we may have a chance of getting to test the 84 again, providing we stay below this zone. I'm actually going to tighten this one up on my core short leftover, and if it breaks above 85.20 again, I might just be out of this. And I've also taken it as one of my euro crosses, especially if the euro suffers from this gas stuff. And we must also say that the UK data were perhaps showing a little better than the European data comparably. So I think there is mainly due to the euro, but also with the comparison and the text here, there is a chance we're getting back towards 84 the figure. We have to break sub this 58.60. We are on the approach of it right now. Another one I have is Euro Aussie, as I've been showing already in the room again. So there's this little, could be a bear flag, which has the bottom line around 146.70 today. I think we need a close below there to possibly validate this bear flag coming into play now. I started short on this last blip up here and started short right after. Was trying to get deeper into it, but to have more into it on if you would have had a move back up to 148.90, but unfortunately we haven't seen that. So it's only a partial position I'm running short right now. Close below this 65.70 and ideally under the prior top at 146.52.55 should open the way for at least 146 the figure, 145.5, and perhaps in fine 143. That's one of the possibilities that I see on this Euro Aussie right now. I've seen your question, Mike, by the way, about the end of month flows. The other one is the Aussie. The Aussies has tried to break above, but with the rest of the dollars actually regaining some strength. I think in what's happening in the dollar is that people have been selling these dollars after the weaker data last week, and now they have to start to manage those dollars a little bit into the FOMC tomorrow, and that may be part of the moves that we have, just running out of juice for the lower dollar right now. I'm really not sure what to expect. We can easily rebound in stuff like Aussie, Kiwi, cable, for instance. But anyway, the Aussie tried, but seems to fail a little bit. I'm not going to do much in this unless I might give it a go if we get back down to 68.80, but preferably not ahead of the FOMC. Ahead of the FOMC, I'll happily let stuff do its thing. Trading is like going to a restaurant. It's not because you look at the whole menu that you have to eat everything, right? So we look at a lot of stuff, but then we decide where we jump into. And for the time being, I prefer to be in euro crosses than having too much versus dollars. The only one I'm having, but it's like a real small one that I have a leftover. I've been trading along this line for a while on the Kiwi, but I have been selling most of it out on these bounces. I'm having like a really tiny of it leftover. I'll be looking post FOMC. If I get anything closer to 61.70, unless Powell tells us, oh yeah, the next meeting, same, we're going to go way above neutral and even target rates, then of course bets maybe off for a while to be short dollars. But assuming that, and I think the chances are now real that we may see a bit of a slowdown in all those hikes because the data are starting to weaken a little bit. I wouldn't mind looking at the Kiwi again to perhaps get a little bit long against sub 62, but that's tomorrow's music. So let's go back on the other one that I have. It's a bit boring. We're in the Euromex. We are turning around this 80s. Well, now we're lower. We're on this 2080. It's been a low prior. I'm still core short. I still looking to add again on bounces. I was a bit too optimistic, trying to wait for a bounce into the 2120s the other day. So perhaps already somewhere in the 94 or towards 21, the figure I may add a bit again. Howard, I covered gold just a few minutes ago. So that for the Euromex, the dollar mex is hovering around this. Let me update this a little bit quickly. I think the dollar mex is a bit undecisive right here and now, especially due to its proximity to the US. So it's, to me, we're in a bit of a range, bit of a possible triangle again. But as long as we are in between, this line is now quite watered down. I think low 2030s are going to be supportive for the dollar mex. This one I'm just going to kill it, and I think this zone, like the high 2060s towards 2070 should be a bit toppish if we get back down, if we get back up there. So a bit rangy in my opinion right here and now. And the last one that I'm in again from the morning, but in smaller, I'm looking at this triangle in the Euro Canada, and this one seems to be on the verge of breaking. We are in this 130, 70, 80 area. If we get a close below there, I think we may have a chance to get back down to 130.30 and perhaps even have a look at 130, the figure again. In the light of everything that's happening on the gas and on the and seeing the elasticity still that we are seeing on oil, because oil was looking bad earlier and the end of last week, but now we are already rallying back in oil and gas. Canada is still an exporter. Canada is also in talks with the EU to export more oil and gas to the EU. So it's a little like the Norwegian. Canada would be a beneficiary. So I've started a very small short again in this one this morning, as people in the chat know, and I'm looking to add probably a little bit around 130, 140, and if we get back to this top line, adding more. But if we get a close below here, this looks like we might just get a chance to perhaps get it back down to 130. And that's about it for me right here and now, I must say. Unless somebody else has something to look at.
Yeah, please put it up in the comments if you want us to look at something, but also, give us your views as well, what you're looking at, what you're thinking of. Do you want me to take it back, Kay? And I can always ping it back to you should the need arise. There we go. So just wanted to look some other bits and pieces on the data front. Japan, call it their PPI, came in higher by a pip year on year. The Bank of Japan core measure up again 1.6% versus 1.5 prior. Not a lot of data out today, but we do have some house price numbers coming out from the US. May data, so a bit lagging. Shouldn't see any big problems here. We've seen in the other housing data that the house prices are remaining steadily high. So as we've mentioned about the housing market, this will be the next brick to fall, if you like, the next domino to fall if prices start collapsing. The big number today is potentially the consumer confidence from the US. This is the main conference board number, not the Michigan one. This also has those inflation expectations in that are front and centre of certainly Powell's thinking. As mentioned, it's unlikely to change the outcome of tomorrow's meeting, but that could be very important for the path of Fed hikes moving forward, because if we do see the numbers really collapsing here in the inflation expectations from the consumer, then that's going to get the market hopping and bopping around those and what that means for the Fed going forward. We do get new home sales at the same time, so keep an eye on that if there is any problems there as well. We've seen it weakening in the housing data, the last few numbers. Then we get some more of the minor manufacturing surveys from some of the regional banks. There's also, and it's never on the calendar, I don't know why it's never on the calendar, but we also get the Philly Fed services or the non-manufacturing report today. That'll be out at 1:30 as well, tends to catch people on the hop. Not a big number in itself, but we saw services in the market PMI going into contraction. So this is another service level piece of data. We'll see if that's as weak as well, and the components, prices paid, wages, employment, that sort of thing. So a couple of bits to keep up on that. As I say, the Philly Fed non-manufacturing is never on any calendars. I don't know why, but that'll be out at 1:30 London time, 12:30 GMT as well. I've just taken a bit of profit on my dollar CAD at 71 as we got this move up here. I'm going to keep an eye on that as we go on. I've really not got much more to cover. So unless you've got any questions, we might call that a session for today. What we will do, both myself and Kay are away from next Monday. It likely that we may just put the show on pause for a couple of weeks while that happens, while we're both away. And then we'll be back in a couple of weeks. We get to finalise that decision. But what we'll do, if we are going to start seeing some quieter markets through the summer, particularly after this week when the last big central bank is done, the Fed, then I've had a few emails from some of you viewers, like Mark from Kenya and a couple of the others who potentially want to come onto the show, or going to come onto the show, and we'll have a chat with them about how they trade and just to give some insight from you guys at the grassroots levels. It's a feature I ran when I was at Forex Live called Guest Trader. We just got people on to talk about markets, explain their situations. So it just gives you a bit of a different angle, a different voice. So I'll look to bring some of those in over any quiet periods that we may have. And if you want any other subjects to do with trading that you want us to talk about rather than just prices, trading psychology, we might have a chat, one session about trading setups, what equipment you have, what you need, to trade full-time, part-time, or whatever you do, whether you want 20 screens or 2 screens or that sort of thing. So we can run a few sessions on that as well, and some other subjects, as I say, if it's quiet and there's not much to talk about price-wise. So anyway, there's nothing ever else in the questions there. So yeah, we'll call that a day today, and we'll get set up for the Fed tomorrow. We'll have a good session on the show tomorrow. We'll get some proper levels down on paper, what we're looking at, what Kay's looking at, and maybe Stelios if he's back from the beach. So until tomorrow, have a great day ahead. Stay safe. Wish you many pips. Thanks, Kay. We shall see you tomorrow.
Thanks, Ryan. Have a great day, guys.